Hello, today I am super excited to share with you two huge SPACs that are set to explode upwards, and we are talking an easy 300% upside. They are Pershing Square Tontine Holdings and Foley Trasimene Acquisition Corp. In this video, I will briefly go over some simple bullish reasons why you need to know these SPACs, what the potential risks are, and which one has the most potential upside. Stick around, you cannot afford to miss these gravy trains. Make it simple. For those of you who are new to the channel, I am the Simple Trader and I aim to keep it very simple here. I am not a financial advisor, so please understand this is for entertainment only. Without further ado, let's jump straight in and here's the rundown. First, let's talk about my position and what is a SPAC. Then I got three simple bullish reasons for loading up on Pershing Square, and we'll talk about the risk. Then we're going to look into three simple bullish reasons for loading up on Foley Trasimene, and we'll talk about the risk. Lastly, we're going to look at Pershing Square versus Foley Trasimene and see which one would be a better deal for your money right now. My position. First, I need to start by disclosing to you that I do have positions in these stocks, so please take my coming analysis with a pinch of salt and make sure you do your own due diligence, and I hope after that you will see what I see and why I have just bought 51 shares of Pershing Square at $25 and 100 shares of Foley Trasimene at $13. I don't generally invest in SPACs and have avoided them like the plague in the past, maybe because I am so scared of being Nicolad. But this is next level stuff right here. Let's briefly talk about what is a SPAC. Simply put, it stands for a Special Purpose Acquisition Company, which is basically what you call a blank check or a shell company. These are set up for one purpose and one purpose only, and that is to acquire a target company to perform a merger that would provide the acquired company with an accelerated route to a public listing. Some great companies that have gone public via a SPAC merger are DraftKings with Diamond Eagle and Virgin Galactic with Social Capital, just to name a few. But bear in mind, this is also the same route that Nikola took with Vectol Q. Three bullish reasons on Pershing Square. Reason 1. The man behind Pershing Square is none other than Bill Ackman. He is the legendary hedge fund investor who will probably go down in history for his perhaps the move of the century when he turned $27 million into $2.6 billion profit by buying credit default swaps in March this year before the COVID crash. I imagine a man of his legendary status and huge wealth only has two things he is concerned with right now, and that is his reputation and his ego. This is simply the biggest reason why I am betting on Pershing Square. $4 billion was raised in the IPO back in September this year, making it by far the largest ever SPAC debut in market history. Generally, SPACs raise between say $350 to $700 million. So put that into perspective. It's then reported that Pershing Square have added another $3 billion into the mix, giving them even more capital to hunt for a larger acquisition. Essentially, I, like many other huge institutional investors, are investing and betting in Bill Ackman to deliver the goods. Reason 2. Acquisition criteria. Now this is big, and as I explained in reason 1, they have the resources to look to acquire a mature unicorn, as Ackman calls it. I mean, the criteria they set almost makes it impossible for them not to acquire a winning company. Ackman stated on CNBC this on Pershing Square: they are the most investor-friendly SPAC in the world, and he stated that he and his team will be taking no compensation, no management fees, no incentive fees, no promotes, and we're not buying cheap stock. There's literally no compensation to the sponsors. This is just something entirely different to the usual SPACs, which gives me immense confidence moving forward. Reason 3. Rumored acquisition targets. Now, we won't know until the day comes, but Pershing Square has been linked with the likes of Airbnb, Robinhood, Bloomberg and Stripe, with Stripe currently being the one that I see with the most potential, even though Stripe CEO has openly come out on Twitter to debunk this rumour. I won't go into full details now, but Stripe is basically running the same business model as Sqaure, which provides the digital platform for monetary transactions. This is a huge space, and considering the success and parabolic moves that Sqaure has made, if they do acquire Stripe, then Pershing Square could explode. It could just go straight to the moon. I will do a full in-depth mode video coming up on Pershing Square as to why I believe Stripe could be the one. But if it is Bloomberg on the other hand, as speculated, then this stock could be going to Jupiter, literally. Risks. Now the biggest risk I see is we don't actually know who Pershing Square will acquire yet, or even when it will be announced. All we do know is that they have a maximum window of 2 years to do so. But honestly guys, I don't think Ackman will let this happen. Judging by Ackman's past performances, I would expect this to be confirmed in the coming 6 months. So if, like me, you want to back one of the most successful investors of our times, now could be the best time to get in. It has already trickled up from its IPO price of $20 per share to today where it's sitting around $25 per share. As the Wolf of Wall Street says, the key to making money in a situation like this
is to position yourself now before the settlement, because by the time you read about it in the Wall Street Journal, it's already too late.
3 bullish reasons on Foley Trasimene. Reason 1. The man behind Foley Trasimene is none other than Bill Foley, the chairman of Fidelity National Financial and Black Knight Financial Services. He is a big-time billionaire investor and entrepreneur with a lifetime of success, with Fidelity being the largest title insurance company in the US and has a market cap of $10 billion. Essentially, like Pershing Square, you would be betting on Bill Foley to send us to the moon. Reason 2. The merger is confirmed to be with PaySafe. This is big and is set to go through in the first quarter of 2021, so we do not have long to wait. The merger implies a pro forma enterprise value of $9 billion. This makes it one of the biggest SPAC mergers in history and looks set to explode. Reason 3. PaySafe is dominating, and according to Benzinga, they have the number 2 market share position in the global digital wallet market. They have customers such as DraftKings, the UK betting company William Hill, Fortnite, Twitch, Spotify, and YouTube. That's not all. They're forecasting 2021 payment volume to hit $103 billion, and they are forecasting compounded annual growth of 11% per year up to 2023. Let that sink in. Foley Trasimene risks. The only risk, and I don't even know I can classify it as a risk, that I see, and one that I don't see many other people talking about, is that we must know this is not the first time PaySafe has gone public. They are a UK based company, and in fact they went public in 2004 on the London Stock Exchange, and in 2017 they were taken over by a private equity consortium and thus were delisted from the London Stock Exchange. Now, I'm not saying that this could happen again, but this is a risk factor that I think you should know if, like me, you want to get into this long term. Now, objectively speaking, both these SPACs carry risk, but for me, the reward is so high that it's somewhere in another universe, and I'm not even trying to pump these stocks up, for real. For me, I could not choose between these two SPACs, so I have hedged my bets and taken up positions in both. With Pershing Square, you are now just betting on Ackman and his solid team to acquire a solid company in the near term. Thus, it presents a potentially higher risk-reward outcome. What reward? We really cannot analyse yet. but I would imagine an easy 50% gain on announcement of a merger day. With Foley Trasimene, we know they are merging with Paysafe early next year, and that is big. Think about this, if you could go back in time and buy Sqaure at $10 a share, would you? Well, this merger, you can now buy Paysafe, who are based on my research on a level playing field with Sqaure. I expect this stock to continue to go up exponentially in the near term to around $25 to $30 leading up to the merger date, but along the way I do see some serious profit taking, so it may well be a trickle up move from now on. I tried to keep this short because I needed to get to you the key facts fast, as I believe these stocks will likely take off soon. I will be going Terminator style.
I'll be back
On both these SPACs in follow-up videos, so stay tuned if you want to go deep diving with me. Thank you for watching, and remember that I've taken positions in these SPACs, so please do take my analysis with a pinch of salt.
Salt it?
Salt it? Jesus Christ, it looks like an episode of Narcos. Why all that salt?
Again, please do your own due diligence and speak to a professional before you look to invest any of your money. If you are interested in other huge growth stocks that I have in my Freedom portfolio, please check out my other videos. For more huge growth stock picks, analysis, updates, please stay tuned and consider to subscribe to my channel so you get the information first. I am the Simple Trader and will simply see you next time.